Hey everyone, in this video I'm going to compare two exciting growth stocks, the Trade Desk and Shopify, and I'm going to answer which one of these two growth stocks is the best one to buy today. So I'm going to compare these two on some financial metrics. So let's begin. Of course, if you look at their percentage price down off their highs, each of them are down significantly. The Trade Desk is down 44% off its highs, and Shopify stock is down 72% off its highs. So each of these growth stocks is down significantly off their highs. If you look at revenue growth, they're also delivering very nice revenue growth. I've got quarterly revenue growth going back to 2018, and the Trade Desk and Shopify, you could see very nice upward trends here, with Shopify showing a more dramatic increase in quarterly revenue growth. Longer term, I would say Shopify has better revenue prospects, given that if you look at the overall percent of retail spending that is happening online right now is roughly around 15%. Shopify benefits as more people shift to shopping online. The Trade Desk, meanwhile, is a digital advertising company. The Trade Desk benefits as more advertising moves to digital channels and overall increase in advertising. Now, the overall increase in ad spending is, expected to grow at mid single digits, so, between 5 to 7% long term. And then as far as the shift from legacy methods of advertising to digital, but let me explain what I mean by legacy to digital. So, legacy methods, you could think of advertising in physical newspapers and physical magazines. Those are legacy methods, right? Old style advertising. New style advertising is ads placed on social media platforms like Meta platforms and Pinterest, and ads placed while you're watching TV on your smart TV, like when you're watching a Roku smart TV and you're watching YouTube on your Roku smart TV, right? And you see an advertisement. Those are digital ads. That's where the Trade Desk excels. However, the room for that transition, there isn't much more to go. In 2022, 64.4% of all advertising was on digital channels already. That was up from 50% 2 years ago. Now, while I do expect that trend to continue higher, I don't expect 100% of advertising to go onto digital, right? There is still going to be some ad spending on legacy places like physical newspapers and billboards and physical magazines and things like that. They're not going to go away completely. So, given the 15% of overall spending is online, and given that 64.4% of advertising spending is digital, I would say Shopify has more room to take a greater percentage of overall spending. So a bigger tailwind longer term for Shopify. The next thing I wanted to look at is the operating profit margin over trailing 12 months. And the Trade Desk has been moving downward on this metric, but recently moved higher to 7.2%. The company had been making investments in its platform, upgrading the services, making it more friendly for buyers of digital advertising to buy their services in an automated way, making it even more effective and efficient in terms of return on investment for marketers. And Trade Desk is seeing benefits from that, right? A large percentage of its customers are coming back and spending more with the Trade Desk every year. That demonstrates to me that marketers are seeing a very good return on investment. Otherwise, they wouldn't keep coming back and spending more on the Trade Desk platform. Shopify's operating profit margin was moving very nicely in the right direction, peaking at near 12% before Shopify made a decision that I'm not a fan of. Shopify decided to invest in logistics, in fulfillment. They wanted to be more like Amazon. They wanted to offer their merchants on the platform the option to buy fulfillment services with Shopify. Now, while that makes it more convenient for merchants, and certainly they can charge merchants a little bit more money for this service, it is expensive and risky, as well as a low profit margin business. If you compare that part of the business to Amazon's e-commerce business is generating losses for the most part. Generating losses for the most part. And that's because it's so expensive to deal with shipping and handling logistics. It's just really expensive. It's hard to do. Even a company as great as Amazon with 2 decades of experience is still negative in terms of operating profit margin in that segment of its business. For that reason, I was not a fan of Shopify making that decision to go in that direction. Now, I may be proven wrong in the long term. I'm not saying I'm absolutely right to think that they're wrong to do this. I'm just saying I'm not a fan of it because of the high risk and the low profit margin potential. You're seeing the evidence right now from Shopify's operating profit margins going from positive 12 to negative 14.68%. Cash flow from operations showing similar trends, right? Trade Desk doing really good at 34.78% and moving in the right direction. Meanwhile, Shopify, since making that decision, moving in the wrong direction, negative 2.44%. So the cash flow metric gives us a similar information, similar insight as the operating profit margin does. And finally, I wanted to compare these two on valuation. The trade desk is selling at a forward price to sales of 13.13, Shopify at a forward price to sales of 7.407. So to answer the question, which one of these two growth stocks would be my choice for the best one to buy right now, I would say the trade desk is the best one to buy right now, mainly because of that decision I highlighted with Shopify going into logistics and the expensive and risky nature of that move. That's the primary difference maker here between these two excellent growth stocks. So there you have it. Trade Desk is my choice. And that's all I've got for this video. Thank you so much for watching. If you want more content like this, please subscribe. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.